Good evening, dear traders. Today we will focus on US dollar against Canadian dollar. So, technically, the weakness in commodity currencies has now started to push US dollar against Canadian dollar back above the key 1.37 zone, with the pair gradually moving toward the next important resistance area around 1.38 and 3. That's a support level of the global range. What is especially interesting is that this move happened despite a generally positive risk-on environment across financial markets. So here it is, S&P 500. And equity indexes remain near highs, and oil prices are still elevated, conditions that would normally support the Canadian dollar and other commodity-linked currencies. So here, WTI, US oil. However, this week the market focus shifted toward a different driver, and it's strong US economic data and the interest rate differential in favor of the US dollar. Recent US statistics continue to support the dollar. Labor market data remains relatively stable. Economic activity indicators are holding up, and inflation risks tied to energy prices are keeping the Federal Reserve cautious. At the same time, the interest rate advantage remains clearly on the side of the US dollar, which continues to support demand for US dollar assets globally. As a result, neither expensive oil nor the broader risk-on sentiment was enough to offset the current wave of dollar strength. Technically, after reclaiming the 1.37 area, the market is now attempting to build momentum toward 1.38 and 3, an important resistance zone and a key area within the broader long-term range structure. For now, the trend remains constructive for US dollar against Canadian dollar unless the pair falls back below the recently reclaimed support levels.